In this section, we'll cover how to measure well-being based on data that you can collect in surveys. We'll cover how to measure wealth, which includes income, consumption, and assets. And we'll also talk about how to measure debt and savings, health, education, and how to choose appropriate questions for surveys. Wealth is a somewhat abstract idea of generally how much a person has. This means that there's no easy way to measure how much wealth a person has, since wealth varies across time and domains. Probably the most common measure of wealth is income. However, this might not be the most reliable measure, especially in developing societies, in which few individuals have formal employment and cash income flows can be unstable over time. Consumption is often more stable over time and might be a better measure of well-being. Assets are even more stable than income and also a good measure of standard of living. However, assets might be too stable over time and are slow to adjust to changes in people's situation. Ideally, measures of all three of these dimensions of wealth give us a more complete image of the wealth that a person has. There are several difficulties in measuring income, as people without formal employment likely have no records of income. Given this, simply asking a person to state their income is not very reliable. Micro-entrepreneurs may have income that is made up of lots of small payments from multiple sources, and this will make it difficult for people to remember how much they've earned. Making things even more complicated, transactions may not involve any cash at all, and this might be especially true in rural areas. These factors can make it especially difficult to compare the incomes of people with different occupations, since some occupations may make it easier to keep track of income. Luckily, there are a few ways of approximating income that make the measurements more accurate. First of all, asking about income over a shorter period of time makes it more likely that individuals will remember income more accurately. Another tip is to ask about different income-generating activities separately. So in other words, first ask about what income-generating activities respondents are involved in, and then ask about how much they've earned from each individually. Because of some of these problems in measuring income, it can be even more difficult to get a reliable estimate of household-level income. This is because doing so would involve getting in-depth information from each member of the household who is engaged in some sort of income-generating activity. Also keep in mind that income can vary greatly depending on the time of year. For example, for people engaged in agriculture, they might sell crops only once a year. In this case, income from one time of the year might be a poor indicator of income over the course of the year. Also, don't forget to ask about remittances from relatives abroad, as this may be a large component of income for some households. Micro-entrepreneurs typically keep no records of expenditures, and they don't distinguish between profits and revenues. Therefore, if you need an accurate estimate of income from small business activity, you'll need to ask questions both about cash generated from IGAs as well as costs associated with running small businesses. So, for example, if you're measuring income from vendors of fruits and vegetables, you should ask about not just the amount of money they get from selling these items, but also the amount that they buy the goods for. One particular problem in measuring income is assigning a cash value to agricultural products produced for consumption. Again, it's important to account for agricultural inputs like seeds, fertilizers, etc., since failing to take these costs into account will make it seem like the individual has more income than they actually do.